housekeeping rules. If you have a question, you can type in the chat, or you can just raise your hand. I'll be able to unmute your mic. Just make sure you have clicked on the join audio button. Okay, join audio, either join phone audio or join computer audio, depending on where you are going to be attending the meeting from, okay, which device. But today we're going to be looking at something that's from the ebook strategy. Okay, it contains a few things, additional things that we did manage to put together along with my partner. So I'll just show you guys what it is. I think the PDF is already in the Telegram channel. Okay, so I think 2 weeks ago we briefly spoke about automated systems, right, as well as automated trading as well as discretionary trading. And we described automated trading as systems that either give you a signal to buy or to sell, or they take the trade on your behalf, right? Decide the lot size, whatever. But essentially, they automate some or all of the process that's involved in trading. So that would be an automated system. So a semi-automated system, probably half of the process, let's say choosing lot size as well as taking the trade, will be automated, and then you might set your stop loss or take profit, So with this, it's more of a semi-automated because it just provides trading signals. It just generates trading signals from a momentum standpoint, right? And all it does, it also shows you where you can get out. You decide, obviously, your lot size. You can also make a decision about where you like to place your stop loss, okay? But preferably you want to have that in more or less the same place, okay? And depending obviously on the markets that you are trading. So if you are trading a broad spectrum of markets, typically you're going to have a lot size that is close to a certain amount of, rather a take profit and a stop loss that is suited for that particular currency pair, okay? Because not all currency pairs move the same, okay? Not all currency pairs have the same amount of volatility within them on a day-to-day basis. So it is quite important to have like the relevant stop loss for that particular market. Obviously, the take profit side will take care of itself because you'll be looking at getting a bit more in terms of profits than you would if you were to take a loss, for example. Okay, so if you're familiar with Heiken Ashi, generally Heiken Ashi candles just smooth out price action. Okay, so when you throw on the template, you basically get this, right? So you get this sort of setup. Okay, so let me just grab my writing tool rather. Okay, I think my arrow better. Yeah, I think my arrow is better. Okay, so you can see price has been moving upwards, okay, prior to this drop, obviously, but it generally gives us an idea of where the market is going, okay, where the momentum is going. That is what the Heiken Ashi candles do. Okay, now the best way to approach or to think about Heiken Ashi candles, it's not so much the amount of pips, but it's more like the momentum. Okay, not sure if I'm making sense, but you get a series of candles. Okay, let's say red candles, which are going up. You can customize it. If you want green to show you upwards, then you can customize to green. And if you want red to show you down or bearish movement, then you can customize to red. Okay, so it's not that much of a deal. It's just that this is the way that I prefer the template. Okay, or sometimes I used to use blue, right? So I changed the up candles to blue, and then I changed the down candles to white. Okay, now you can see that the price is heading upwards, and we have the 5 moving average over here. Okay, there's the 5 moving average right over there, and the reason being is that we want to get into a market as quickly as possible, right? So we don't want to be too late for the trend, but we also don't want to be too early for the trend. Okay. The idea is that it doesn't matter how good your entry actually is, right? If your risk control or your risk management as well aren't on point, then it's very difficult for you to actually make any consistent profits within, as a trader, right? So generally, what you want to see is some sort of entry rule that allows you to get in comfortably, right? And some exit rules that allows you to get out of the market while you have a bit of profit. Okay. Because at some point we all get greedy, right? We all feel like we want to wring the market out of every single pip. Therefore, we want to stay in as long as possible. So with this sort of thing, it allows you to take away a lot of the decision making. Okay. You don't really need to do a lot of analysis. It takes away the decision making. Your job is just to improve on your trading skills and not your technical skills all that much. Okay, so Heiken Ashi candles, a series of red candles in this case heading upwards show us upward momentum. Okay, now what we'd like to see after a long upward trend is obviously a reversal. Okay, now you can couple this with a few other things. Let's say, for example, your support or your resistance, or you can use overbought, oversold signals, or I don't know, trend line. You can also use a trend line, and all of that then will come in together to make one signal. But you can also use it just by itself, in that you wait for the cross of the Heiken Ashi candle below the 5 moving average. Okay, so below the 5 moving average, we'd like to see, okay, below the 5 moving average. So let's say over here, boom. And this is where we typically want to go short. Okay, and if the market goes down, as long as the candles remain white, right? As long as the Heiken Ashi candles remain white, we would like to stay in the short trade. I would like to stay in the short trade and not get out. Okay. Now, as soon as we start seeing the buy signal, because the buy signal, when the candle closes, and typically you're going to get an arrow pointing upwards, right? So that's all automated, right? So the cross of the moving average of the Heiken Ashi candle above the moving average basically shows us a shift in, or potential shift rather, in momentum. And we can use that as an indication that, okay, we need to get out of our sell position. So if we had a sell position there, boom, right, then what we can do is wait for these series of white candles. As long as the candles remain below that moving average and they remain white, what we want to do is stay within that trade. Okay, we're not getting out. And then once price goes above the moving average, okay, then we get out of our short position. And if the analysis agrees with it, then we can take the buy heading upwards. Okay, and the same thing would apply. We stay in the trade as long as the candlesticks keep closing above the moving average, as well as we don't have a cross below that moving average. Okay, so the candles are red, right? Consistently red, and the candlestick doesn't close below the moving average. Now, not all candlesticks that close below are going to qualify as I can say indications that the price will change, because in some stage, right, a lot of the time you will get these white candle, right? So this white candle, this is a down candle, in fact. So this down candle will close below the 5 moving average. Okay, but you can see there that we didn't really get a signal to short. Okay, we didn't get a signal to short. That is because there are oscillators down below over here, right? These two oscillators here. Okay, this is not the MACD, guys. No, you're gonna think it is, but it's well, it's not the basic one, but it just basically filters out a lot of the noise regarding false signals. Okay, and what would happen is, okay, And what would happen is you get this type of signal that would qualify as a sell, but you don't get a signal, right? The arrow fires when the price action, okay, which is the candlestick, closing above 5 moving average, right? And from your two indicators down here below, you get the confirmation that, okay, now it seems like the momentum is shifting to the upside. Then you get an arrow which actually just points either up or points down. The only thing that you then need to do is you just place your trade, okay? If it's in line with, if the trade then is in line with what you've analyzed in terms of short-term trend, right, whether it be up or down, then you can take the trade, place your stop loss, as well as place your take profit. So that's how it would basically work. Okay, there's no other, I can say, there's not a lot of rules when it actually comes to this. It's just finding sort of like the best or the optimum settings in terms of stop loss, take profit, and you can apply it also in any time frame that you wish. Okay, now there is a best time for you to be able to use this, because typically when you're looking at the London session, right, the London session will have a lot of volatility within it. Okay, if you try to trade the Asian session, you're going to have a lot of false signals, which is why we see this sort of movement. Okay, right, which is why we see that prior to the London session actually opening. Right, so this is the London session, this gray area here, it highlights where the London session is, right? So this is the beginning, and we just got a signal to short right at the beginning of the London session. Okay, so that is our short, and we take the trade. Obviously, we place our stop loss out of range, right? Outside of the range, outside of the high of the day, and our take profit, typically we're going to leave it open. Okay, typically we're going to leave it open because we need to see a signal firing on the upside in order for us to get out of the short trade and into the long trade. Now, this is really good, especially when it comes to indices, right? So you can trade using this strategy and this sort of like analyzer. I'm not sure if I should call it that, or signal generator, because with indices, price action is like, there's a lot of momentum. Okay, unlike a lot of the foreign exchange currencies, you do get a lot of sideways choppiness. There's a lot of noise most of the time. But with an index, leaving the take profit open means you can capture that much more. You can have 3 or 4 or 5 days of rise, limit up 5 days, and that will allow you to, have a very small risk relative to the reward that you can actually take, you can potentially take. Now, as I mentioned, any time frame, you'll be able to use that. You can go on through to the 1 hour, you'll see signals. You can go on through to the 4 hour, you'll see longer term signals, right? But I think 4 hours is the maximum that you can go. So I think 4 hour, 1 hour, and 30 minutes. But typically guys who use this for short-term trading, right, the Heiken Ashi and all this, they usually do it on the 30-minute time frame. Okay, so 30 minutes is a very good one. 15 minutes, I mean, you're going to get a lot of signals, but not a lot of them are reliable. But you want to go for the 1 hour as well as 30 minutes if you want to be short-term trading. Okay, so I mean, just about anything you can use this to trade off. Okay, as in the PDF, I'm pretty certain that everyone has it. Okay, so it's basically a momentum strategy and uses the CHL, CCI, TVI, and T3 along with the 5 moving average, as I've mentioned. Right, so that's the confirmation for the entries. So we use the Heiken Ashi to smooth out price. Okay, so the decision to buy or sell isn't yours, right? It's a system, and it takes away a lot of great area that's involved with trading. Sometimes you might see something and you might think you didn't, so you might get caught in between 2 opinions, right? But this makes it very simple. The only thing that you need to focus on is obviously your risk control and your risk management, okay, or your trade management rather. Okay, so you sell in line basically with the downtrend. 30-minute candle closes and gives you a down arrow, and that is your signal to sell. So stop loss, you can place it above the swing high or the high of the day, or if you are buying, it's going to be below the support level or below the high or below the low of the day rather. Okay, now, okay, don't know how I did that. Okay, so now you can buy in line with trend, right? With buy setup, and 30-minute candle closes, giving you an up arrow. So you're gonna get an up arrow, boom, and all you do is place your buy and you place your stop loss, and you can just leave your take profit open. Okay, I know some guys get a bit nervous without any take profits, so you can place your take profit at least 2 times or 3 times more than your stop loss. Okay, so that would be probably the wisest thing to do if you must use a take profit all the time. Okay. Right, so to ensure you get the best out of the trading system, you just need to ensure that you use a 4-hour time frame, okay, for your trend. So if the 4 hour shows you an uptrend, then you typically want to be taking trades in line with your 4-hour time frame. So here would be your buy, okay. Right, let me just get my arrow again. Okay, so there was the buy, there was the stop loss, and there was the take profit. Okay, let me draw that again. Buy, stop loss, take profit. Okay, we are being shown an upward trend, and it does fall in line with our London session. Right, so right at the open of the London session, that is where the signal actually fires. Okay. Right, so if you guys have any questions, now would be the best time to send them through. If you have any questions whatsoever, anything you want me to go over. Okay, so just type in the chat if you have any questions. If not, I will be ending off tonight's session here. All right. And I will be seeing everyone for the group session sometime next week on Tuesday, I believe. Right. And I think I did answer the question regarding the one-on-one sessions in the video that I posted in the Telegram channel. Okay. So if you have any questions regarding that, just send a message on the WhatsApp number, the 063 number. And yes, thank you very much, guys. I am feeling a whole lot better today. Okay. And thank you very much for those get well soon messages. Pretty sure they helped. Hope you guys enjoy the rest of your weekend. Obviously, if we have one-on-one sessions organized, you know your times. So we'll stay in touch for the rest of the evening. And I hope you guys enjoy the rest of your day.